Serving in the military means stepping into some seriously high-risk situations, whether it's deployment, training, or just the unpredictability of the job. That's why protecting your family financially is so important. One of the military benefits you have while in uniform is Service Members Group Life Insurance, known as SGLI, an affordable life insurance plan that provides generous coverage. I'll break down what it covers, how much you can get, and what it costs. Then I'll shift to Veterans Group Life Insurance, known as VGLI, which helps you maintain coverage after you leave the military. I'll walk through how it works and how it compares to SGLI. And to wrap things up, I'll answer a few common questions we hear about both programs, so you can feel confident making the right choice for your future. Let's quickly go over who is eligible for SGLI. There are a few specialized government roles that qualify, but for our purposes, it comes down to 3 groups. Active duty members of the Army, Navy, Air Force, Marines, Coast Guard, and Space Force, members of the Ready Reserve or National Guard who are assigned to a unit and scheduled to perform at least 12 periods of inactive training per year, and cadets and midshipmen at U.S. military academies or in ROTC programs at other colleges or universities. If you fall into one of these categories, you are automatically enrolled in the program, and once your coverage is in place, you are covered 24/7, on duty or off, until 120 days after you leave the military. How much coverage does SGLI provide, and how much does it cost? Eligible members are enrolled in SGLI for the full coverage amount of $500,000 for a monthly premium of $26. This includes traumatic injury protection, which provides a one-time lump sum payment to service members who experience a qualifying injury. Premiums are automatically deducted from your paycheck. You can decline SGLI or reduce the amount of your coverage in increments of $50,000. But keep in mind that SGLI is extremely affordable compared to most other insurance options. Even if you don't have a family of your own, you may want to consider naming parents, siblings, or other family members as beneficiaries for now. What is Veterans Group Life Insurance and how does it work? Veterans Group Life Insurance, or VGLI, is renewable term life insurance that gives you the option to continue coverage after you separate from service. When you leave active duty, you can't take your SGLI with you. You are eligible to apply for VGLI for up to 1 year and 120 days after you separate. But if you apply within 240 days, you won't need to provide medical evidence to qualify. That makes VGLI especially valuable if you have health conditions that might make private life insurance harder to get or more expensive. Your coverage amount is based on how much SGLI you had at separation. For example, if you have $200,000 of SGLI when you separate, that's the maximum amount of VGLI you can automatically apply for. You can increase your coverage by $25,000 after 1 year, and then every 5 years after that, up to a maximum of $500,000. Unlike SGLI, the cost of VGLI increases every 5 years based on your age. It's reasonably affordable for younger veterans, but becomes quite expensive as you move into middle age. For that reason, VGLI is perhaps best viewed as transitional coverage. Is your SGLI coverage enough to protect your family long-term? Don't make the mistake of assuming that SGLI is the right amount of coverage. Take the time to assess the needs of your family in the event of your death. Would they need money to pay off debt? This could include things like credit cards, car loans, or even a mortgage. How about final expenses? Would your family need to replace all or a portion of your income? Would they want to set aside money to help pay for college for your children? These costs can add up quickly. And while you can try to figure it out on your own, it's something that an experienced financial advisor who's familiar with military benefits can guide you through. What are VGLI alternatives? Keep in mind that you can't take SGLI with you when you leave the military. We discussed the idea of using VGLI to replace SGLI, but you may also want to consider securing coverage from a private company. For example, you could purchase permanent life insurance that is guaranteed to be in place when you die. It's typically more expensive than term insurance initially, but it allows you to lock in your premiums for life. The younger and healthier you are, the more attractive this option becomes. Or if you are transitioning from the military, your new employer may offer affordable, or even free, group term insurance. You may even find that you can purchase term insurance at a lower cost than VGLI, allowing you to be able to lock in that premium for as long as 20 or 30 years. The bottom line is that it's generally best not to make decisions about SGLI and VGLI in isolation, but in the context of your family's overall financial plan. Let's wrap things up by answering some frequently asked questions. Can I decline SGLI coverage? Yes, you can reduce or opt out entirely through the SGLI Online Enrollment System, or SOES. Can you have SGLI and VGLI at the same time? No. SGLI is for active duty only, and VGLI is for separated service members. Should I replace SGLI with VGLI? It's a good idea to keep some life insurance, but the decision to replace SGLI with VGLI depends on your budget and your family needs. Are SGLI or VGLI premiums or coverage options changing in 2025? Yes, the rates for both decreased from $31 per month to $26 per month on July 1, 2025, making coverage even more affordable. Who can I designate as my SGLI or VGLI beneficiary? You can designate any person, trust, corporation, charity, church, or any other legal entity as your primary or secondary beneficiary. Now let's recap some key points. SGLI is affordable term life insurance for active duty service members, National Guard and Ready Reserve members, and Service Academy or ROTC cadets. It provides up to $500,000 of coverage for a monthly premium of $26. VGLI is an optional continuation of coverage after separation. It costs more than SGLI, and the monthly premium increases every 5 years based on your age. When making decisions about SGLI or VGLI, you should consider whether your coverage and its cost meet your family's financial needs. It's important to review private alternatives and discuss your options with a financial advisor to feel confident about the path forward. For more financial planning insights tailored to military life, subscribe to our channel for future content.